Price Club. Now, Price Club was a stock that I was able to capitalize on a great deal because I'd been in the stores when they only had 2 in California, and I was quite impressed with it. In fact, after I had been in the store, I couldn't even find a chart on it, so we've had to dig up past prices and plot one ourselves. And if you look at the June 81 period, which is on the far left, you'll see it just went up and up and up. And I was looking for a base, and it just didn't occur. And finally, it went into this long double bottom, and we got an opportunity to begin buying it. And we started exactly there where you see the first buy point. You had a shakeout, and you came back up through the bottom there by 3 points or more. Now, these prices are all split adjusted, so take that into account. But getting started real early, coming off the bottom of the double bottom, it built a handle, and you had a more classic buy point there. You see that marked on your chart. And then, of course, if the stock bounces off of a 10-week moving average line, we're going to add to it. And you had that situation happening. And notice that first bounce off of the 10-week line moved up for 1, 2, 3, 4, 5, 6, 7, 8 weeks in a row. Now, when you see a stock does something like that, ironically, what it's telling you is it's got such consistent power that it's probably going to ultimately go substantially higher. Now, it may build a base after that, but the fact that it could go up 8 weeks in a row means that there are professionals buying that stock. That's not the public buying it. It's institutions buying it. So when you count 5, 6, 8, 10, 12 weeks in a row, it means something. Now, after that short span, let's see, that was 1, 2, 3, 4, 5, 6, 7, you had 3 weeks tight, which gave you another buy point, because that 3 weeks tight is telling you that in spite of the fact it's gone up a number of weeks, that they're still buying that stock at that level. And of course, you can see it comes out of that and probably almost doubles. Then you build another base. We see the base tightening up where you had 4 weeks very tight closes. And when you're reading charts, when you have these very tight movements, that usually means accumulation going on. So always look for tight areas within a base, as well as a few weeks where the volume is up substantially. Now, you come out of that last week of the 4 weeks tight, and you take off and run, and then you sort of run into something we've nicknamed railroad tracks, where after you run up sharply, suddenly you retrace the same territory, the 2 tracks there, and a little bit of volume in the situation. Normally that means distribution, and you'll probably be going through a correction. So you see that was a prolonged correction, but ultimately it finally comes out of it and starts a run up itself. So the railroad tracks give you a reason to be selling the stock. If you don't figure that one out, you'll see it once you're breaking and closing below the 10-week line a little bit later. My wife came from San Diego. She had a lot of friends down there, and one of them called me one time and said, the next time you come down, I'll show you Price Club. It's really a unique situation. And I think that was when they had their second store. It was down there. So that was the clue that I got. And when I went through the store, I could see, wow, this is totally different. People are all over the place. The lines are long. They didn't just have 1 or 2 checkout stands. They had quite a number, and there was a line in each one of them. The concept was unique. And what I found over the past many years is that many of my better stocks have been retail-oriented because it's easy to understand them. You can walk in the store and say, hey, is this something unique and different and superior, and have they got some advantage? And that was what they had. And, of course, the way these kind of stocks can have a big move is they open more stores, and they go to new cities and new states. And, of course, when somebody's only got a few stores, you can sit and say, well, they can have at least 15 stores or 20 or 25 or something. And that's what I did. I figured how many could they have in California, and once they went to San Francisco and maybe a few in Phoenix. So you get a feeling of what's possible. And this was very early in their move, and that's the way it evolved. I guess we could look at the chart, but it was probably a tenfold move that occurred, and that was as they opened the branches in Oregon and San Francisco Arizona, and they even went back east for a little bit, which bothered me a little bit because they skipped from California to New Jersey. One of the, I think it was a money manager that ran the money for Sears. So he was a Sears person. And I'd known him for a number of years, and he'd come out to visit us once every year because he liked our research and the things we're doing. And when he came out, I said, hey, I want to take you over. I want to show you something. And then I took him to one of the stores. And he said, well, that kind of looks like one of the warehouse operations we have in Chicago. So when he goes back, he talks to his board of directors and some of the key people and says more or less that that's what they ought to be doing. And, of course, they didn't do anything about it. That reminds me that I think Alexander Graham Bell went to the head of Western Union and offered to sell an interest in his product. The head of Western Union said, what would I do with an interesting toy like that? That was the telephone. So the world is filled with interesting experiences.